Hello and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. So we'll start taking all of that. But before that, let's have a look at what the markets are up to. So Cheryl, quite a muted and a range-bound action what we are seeing for the Indian indices. But Metal Pack is making a strong comeback.
Absolutely. A very good morning to you, Shrishti. I must say it is going to be an extremely busy day for you, given the fact that you will have two auto majors come out with their quarterly numbers later today, and given the fact that you track the sector very closely. So key to watch out for Bajaj Auto as well as Tata Motors in trade today. But like Shrishti mentioned, yes, it's been a range-bound trading session coming in for the benchmark indices. Pretty much muted actually. When it comes to the benchmarks, you have Nifty Bank right now that is drifted in the negative territory, actually underperforming the benchmark indices as we speak. It's the broader markets that continues to hold on to gains. If you see mid cap as well as small cap index, both of them seeing gains of about 0.1% or so, but that one also has seen a drift to the day towards the day's lowest point. Metal index, like the way how Shrishti mentioned, they are firing on all cylinders. Remember, Tata Steel came out with the numbers yesterday. So you have JSW Steel, Tata Steel, Hindalco among the top gainers on the Nifty. Add to the list and Ultratech as well as NTPC. They are the ones that are gaining in trade, as well as Tata Motors. But on the flip side is ITC that continues to sulk this after the company actually came out and informed the exchanges that board has given in principle nod for the hotels business demerger. Remember, ET Now had first broken the story that they were going to consider it as soon as next month, and that's what is happening. They will give us more details on August 14th. But for now, you can see ITC second day of declines coming in for that one, 3% downtick coming in for ITC. Asian Paints set to report its numbers down 1.8%. You have Britannia down 1.6%, as well as Tech Mahindra and SBI Life are the other counters that are declining in trade as we speak. Talking about the sectoral indices then, is the FMCG index that's down about 1.3%. PSU Bank index also sulking in trade. IT index once again is subdued in the trading session, but it's the metal index holding the fort pretty much strong, as well as realty index and auto index. So that's the way how the markets are looking like at this point in time. Shrishti, yes, range-bound trading session, some sort of a subdued move coming in for the benchmarks.
Okay, so that's how the markets are looking like. But moving on, and let's start taking all your stock-related queries onto the show. And viewers, it's a very simple process where you can connect with us live on the WhatsApp number that is flashing on your screen, as well as you can write to us live on our Twitter as well as Facebook pages, and we'll try to take as many queries as possible. But before that, let me welcome on board two of our experts. Firstly, today we have Rajesh Agrawal onto the fundamental side, and to guide us better on the technical front, we have Kunal Bothra. A very good morning to both of you. And taking the first question, Kunal, this one is for you, and this one is from Tushar from Delhi. And he wants to know, is this a good time to invest in Castrol India from a mid to long-term perspective?
Well, I would not suggest so. I would believe that it's a stock which has been a huge underperformer. Doesn't look like that the stock is going into any kind of a big breakout mode, especially on the weekly and the monthly charts. It's still struggling on the medium to long term basis. I think at now 135-36 levels, it's still not broken a major confirmation of the previous high. The previous multi-month high for Castrol was in 2021 when the stock was almost at I think 154-55 rupees. So it's yet to confirm the breakout of even the last 2 years of highs. So I would expect the stock to continue to remain to a drag as well as underperform. If possible, if you're holding, assuming from lower levels, I think it's a good time actually where you should look to book out profits.
All right, the next query that we have is coming in from Ajay, and he wants to know what's the chance of BHEL hitting 110. He's already holding the stuff from December onwards, Kunal, and the price that he's been holding on to BHEL is 90 rupees per share. He's also holding Subros at a price of around 470 rupees per share. So what are the chances of the prices going higher or actually drifting lower in the near term?
So BHEL, I would believe 100 could be a nominal target. I think it's, that's what the target which I flagged off, a few weeks back. So I believe closer to 100 is where you should look to book out profits because if the market gets into a second leg of an uptrend, which I believe could be a distance away, at least another couple of weeks or another 1 month or so from current levels, I would believe that's the only time where you would probably find these mid-cap stocks to try and get into second leg of breakout. So I think it's good enough that you're making some 10% plus gains on the stock. You should look to size down your position or at least look to book profits closer to this 100 level for BHEL. Even for Subros, I think the stock has run up exceedingly high. The stock went into a strong uptrend from 400, I think 340 to 560 in a matter of 3-4 trading sessions, and from 560, the stock has now corrected back towards 416 mark. That's the that's why I would believe that you should probably try and book profits into these kind of stocks. Wait out for a major retracement. So in case if Subros comes back towards 340 levels, that could be a good starting point where you may look to re-enter.
Okay, moving on, and Rajesh, coming to you for the next query. This one is from Shankar from Chennai, and he has bought 27 shares of Dixon Technologies from a price of 4,141 rupees. As in, we are seeing the stock is moving down. Yesterday itself, it was under pressure, and today the results are due. So, what is the expectation, and how should investors place himself? He's not at a loss right now, but what should be the strategy going ahead?
Good morning, Shrishti. Good morning, Cheryl. Good morning, Kural. Dixon is a good company, no doubt on that. The outsourcing business is doing well. They are getting good orders for outsourcing and all. They're into white goods manufacturing. But as far as valuations are concerned, I think it's stretched at this point of time. So any upside should be taken as an opportunity to exit. Maybe levels of 3,700, 800 would be a better levels to consider. But at this point of time, I would say exit from this stock.
Okay, this next one is coming in from Vivek, and he wants to know about two counters, Kunal, and he's asked me to ask you this one. One is Bajaj Finance, 6,600 rupees per share. Should he sell, or what sort of a target should he keep on for this particular counter for the next 6 months? Also, United Spirits holding on from the levels of 775. So he wants targets for both of them, and also what should his strategy be? Continue to hold on to it, or I look to exit these counters?
I think you should look to book profits over here for both of these stocks. Now, understand that you've bought quality names and you've bought them at the right price. For United Spirits at 700, I think is a very good timing. Even for Bajaj Finance, I think at those 6,000 odd levels is a well-timed entry for both of these stocks. I would in fact believe that both of these stocks have actually entered into their phase of pause or a major consolidation. United Spirits, I think till day before yesterday, last week was looking very attractive. Yesterday's price action indicates that the stock has now multiple resistances at this 1,020 levels, currently at 980, which means you have a cushion of 3-4% where the stock faces a major resistance. So it's always best to pare down your profits or pare down your positions or look to book out profits into these stocks when they enter into some extreme overbought territories or resistance zones. So I would suggest to book profits for both of these stocks, Bajaj Finance as well as for United Spirits.
Okay, Kunal, the next query is also for you from Sarma from Secunderabad, and he's holding two names. Firstly, it's KPIT as well as Bank of Maharashtra, and sitting at a slight profits in both of these. What should be the near-term target for KPIT and Bank of Maharashtra?
So Bank of Maharashtra, I'll start off with that. That looks a lot more attractive. Now, by near term, if you have a time frame of say 3 months, 6 months plus, then it makes sense to hold on to Bank of Maharashtra. I would expect that the stock can probably look to come back towards maybe in the range of 37, 38 kind of levels. 33.5 is where it's trading right now. So we can expect at least a modest 10% upside for the stock price, and also monitor the behavior of more of these PSU banking stocks. If the PSU banking lot manages to outperform, then you can expect Bank of Maharashtra to give you more high returns from those levels. And so would be the case with the other stock which you mentioned. The other stock which you mentioned was
KPIT.
KPIT Tech. Yeah. Even for that stock, because I was actually looking at the charts for KPIT Tech compared to most of the other mid-cap IT names, KPIT Tech had actually outperformed the other peers. Even this last 2-3 weeks of correction, the stock has not corrected very sharply, and I think it's seeing some sort of bounce for itself today. So that stock can also see a upside from current levels. 1100, 1120 could be a short-term target. By short-term in this case, I would mean the next 2 to 3 weeks.
Okay, the next one is coming from Krish, and this one is specifically for you, Rajesh. He wants to know about two stocks, one from Nifty, one from a mid-cap with good valuations that he can look to invest in for the next 3 years.
The first one, as you all know, would be ITC, of course, no doubt on that.
Rajesh, to be very honest, I was waiting to ask you a question on ITC because things change for you right now, given the fact that that still impending details about, we are still waiting the details actually, finer details about the demerger of the hotel business. But finally, the company has gone ahead, announced they've given an in-principle approval, but Tree seems to be spooked with the fact that they're still continuing to hold on to 40% stake, isn't it?
Yeah, of course, that's right. It's going to hold 40% stake, and the correction which we are witnessing, one is for that news, the other one is that it has run up quite a lot in a very short span of time, expecting the demerger and all. So it's just sell on news, buy on rumors kind of theory playing out, but I think valuation still remains intact. No doubt on that. It's only 20-25 rupees valuation which goes to hotels. Uh, Rather, I would say it's a positive thing because now the hotel business, which was considered as a cash guzzling business and low ROC business, would be separated, and ITC would be considered as a FMCG company focusing more on FMCG, tobacco, people, and all other divisions are doing very well in low capital. Although hotels are also doing well, no doubt on that. But for a longer term period of time, 3 years time horizon, I think this correction is giving a good opportunity to invest. The second one would be Reliance. So these are two from the Nifty pack, I would say. And from the mid-cap side, one can have a look at auto ancillary names like FIM Industries, LG, Balakrishnan, IRCTC, BSC. These are some of the names one can have a look at.
Okay, so those are the top recommendations from Rajesh, and for ITC, this particular dip gives you a good opportunity to invest for the long term and probably for the next 3 years. But with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back to take more of your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking all of his stock-related query. The next one is coming from Arjun. He's writing to us from a district, or rather a town from Karnataka known as Honenahalli. I'm sorry if I've not pronounced it right. But Kunal, his query is to you. SBI, he has 100 shares, and he's saying the buy price for the SBI share is 521 rupees per share. He's also mentioned the fact that he's a medium-term only derivatives trader. So should he look to sell or hold on to it? And what sort of short-term target should he actually keep for SBI in mind?
So from a very short-term play, if you ask me, and specifically from the F&O perspective, then I would believe that on the extreme upside, I would expect 640 to 650 as a target range for SBI. But because the stock has run up in the last 1 month from 550 levels to 620, I think 622 was the high the stock had made yesterday or day before. Because of the steep run up in the last 1 month, the stock can go into those marginal phase of correction. So ideally, since you've bought at 500 levels, you can probably keep a trailing stop loss of 600 ideally for SBI. If it falls below 600, you can look to book out profits and look to buy back again only if the stock comes back above that 620 levels. So that 20 rupees zone is where you should not trade SBI. Below 600 is where I would believe that you should look to book profits.
Okay, Kunal, once again a query for you. This one is from Satya, and he wants to invest 1 lakh rupees for his 15-year-old son for the next 5 years, and he wants to know your top recommendations where he could invest this money.
There are a lot of options over there, so I'll probably give a mix of few large cap names and mid cap stocks. From the larger cap names, I would still believe the likes of Tata Motors looks very attractive. You can look out for something like Infosys or TCS at current levels because there's so much of negative news flow. I believe that these stocks are priced at a very apt level for themselves, and looking at the next 3 to 5 years, I think there could be significant upside for these stocks once the news flow starts to become positive. From the mid-cap names, few of the stocks which I've been repeating earlier, L&T Finance looks attractive. AB Capital is one of the stocks which you can consider a buy. IDFC First Bank is also one of the stocks which you can consider from the financial names.
For all of our viewers who are tuning in right now and who've asked us queries on ITC, we've already taken Rajesh's view on ITC, where he said that this particular dip definitely offers a buying opportunity for ITC. He is pretty bullish on this counter for the longer term. And yes, when it comes to charts, given the fact that the stock right now is moving on news, it wouldn't be correct for actually putting Kunal on the spot and asking him for a target or a stop loss. Once I think the prices would settle in and the news would be digested, Kunal, that would be apt time, right, to kind of consider a stop loss and a target for ITC, isn't it?
Absolutely.
Yeah, but for the fundamental view, our fundamental guest is giving double thumbs up once again for ITC. So yes, for all those who are asking us queries on ITC. But let me take this next one, Kunal. Or rather, it's a medium to short-term investor he is. That's Anand N. He's writing to us from Gurgaon. 125 shares of Asian Paints at a price of 3,050 rupees per share and Godrej Properties at a price of 1,240 rupees per share. He wants to know whether he should go ahead and book some partial profits in both of these counters. He's a short to medium-term investor. We know that we will be having Asian Paints numbers shortly, but apart from that, what are the charts indicating?
Well, for both of these stocks, I think the strategy would be differentiated. I think for example, for Asian Paints, I think it's a good time where you can look to start booking out profits. So you can start at 50% profits at current levels. In case of post results, the stock sees a spike, and if it comes back to say 3600 odd mark, 3600, 3700 zone, that's a zone where you can look to book out additional profits for Asian Paints. Because historically, over the last 4 to 5 years, the stock has been facing a lot of resistance at the 3500 levels, say plus or minus 100 odd rupees. So this time around, the stock may try to make a new high, but then I think closer to that level again, the stock may face a lot of resistance. So it's good to book out profits for Asian Paints. But for Godrej Properties, I would actually expect the stock to get into a strong breakout mode. So even if it gets into a pause, I believe that the second round of up move for these real estate stocks could begin pretty soon. And in that second round of run up, I would believe Godrej Properties can come back towards 1800 to 2000 odd mark, which was the high the stock I think had made in 2020-21. So would be bullish on Godrej Properties and would look to would suggest to book profits on Asian Paints at every rise.
Okay, moving on, and Rajesh, coming to you for this one. This query is on SpiceJet. Selva Pandi from Chennai has been holding SpiceJet since May last year, and in the meanwhile, he also averaged this particular counter, and for now, he's holding over 10,000 shares from a price of 37 rupees 30 paise. What to do next? Because sitting at a loss in this particular name, but going ahead, what is the outlook? Any hopes on recovery?
See, it's a very dicey situation because we all know the kind of negative news flow following this company. Every day something of that sort happens, and we have seen what happened to other airways companies. So it's better to get out of this stock on any upside because it's no point sticking to a low fundamental stock for a longer term horizon. I would say sell on rise kind of strategy would be a better 30 to 33 odd rupees when you try to get out of the stock.
All right, let me go on to the next query that I have. This one is coming from Vishwanathan Nair. I'm very sorry, for 6 days in a row you've been writing to us. We've not been able to take your query, but today I will take your queries to Kunal. Kunal, he has a couple of stocks in his portfolio, about 100 shares each of Bajaj that he's purchased at 300, BLS International 158 rupees per share, Electronic Marts at 59 and Sona Comstar 508. He wants to know, should he book profits or look to hold on to these companies, or what sort of a strategy should he adopt? And if you see, most of these counters that he's purchased are recently listed counters.
Yeah, they are recently listed. Of course, the chart history for most of them, I think, Bikaji, for example, BLS International, etc. Most of these stocks, the chart patterns are a lot more limited. But I also believe that many of these stocks are confirming a very strong trending move for themselves. For example, Bikaji has managed to come back about that 450 mark, which was the high the stock had made, I think, in the end of 2022, post the listing, of course. So I think the stock has managed to confirm that breakout in a very steady kind of a manner. Same is the case with BLS International. The stock has come back towards a breakout above 100 mark, which was the high, I think, 2017-18 for SW Sona Comstar. In fact, the stock has confirmed a short-term breakout about that 550 mark. So all of the names which you've mentioned have actually somehow gotten to their individual breakout zones, short-term as well as medium-term. I would suggest to hold on to these stocks because when these stocks get into such a kind of a steady breakout, there is all the more chances that when the market also, after a bit of a consolidation, when the market gets ready for second round of up move, that you would expect that these stocks would continue to outperform. So there could be a patch where these stocks may consolidate, mild correction, etc. But I would believe that because of the steady uptrend, the upside potential for these stocks is significantly high.
Okay, so those are the outlook on a couple of names. But with this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, and let's shift focus to some of the earnings, and we'll talk about JK Paper. This particular company reported a stellar set in Q1 where the margins have seen an expansion. All in all, if we look at the revenue, has seen a jump of over 10% and net profit saw a jump of 18.5%. When we talk about some of the other plans of the company, so they have plans to invest 650 crores in the new pulp plant, and on the back of all this news flow, we are seeing a good jump in the stock of JK Paper. So let's try understand more about the outlook of the company and how the financials expected to shape up. For that, we are being joined by Veerappan KR, who is the CFO of JK Paper. Hi, very good morning, Mr. Veerappan, and thank you so much for your time to ET Now. Firstly, when we talk about the demand, then more people coming back to the offices now, moving from their work from home setup. So how do you see the demand going ahead for Q2? How do you expect more jump on your demand, and how will the realizations look like?
Thank you. Let me talk about the demand. As far as demand is concerned, yes, you rightly said that now people are coming up after the summer vacation, the schools are opened up. And as far as uncoated the writing and printing is concerned, we believe the demand will remain stable and demand is good. We don't see any issue. But however, as far as packaging board is concerned, the demand continues to remain subdued, and especially in Q1. And it was not in line with the expected growth rate. Exports have dropped significantly due to low international prices and additional capacity coming up in China. Going forward in Q2, we expect the situation will slightly improve. So the demand front, we don't see an issue. But one caution, the international pulp prices have come down significantly from the level of $800, $900 per ton last year to now almost $500 per ton, which is impacting the market sentiments. So there has been a constant pressure. International paper prices have come down. So there is a constant pressure on the domestic pricing also. So this may impact the uncoated segment also in Q2. So the realization expected to come down. As far as packaging board, I think it's already hit a rock bottom, and we don't believe any further price correction, and that should remain stable.
Right. Good morning, Mr. Veerappan. This is Cheryl also joining in the conversation, and you did actually touch upon the part where you talk about the pulp prices that have come down. You're expecting to see actually pressure on domestic pricing as well. If you could tell us more on that particular front. Also, if you could tell us what sort of a margin are you expecting going ahead, as well as EBITDA per ton, per unit?
Yeah, I'm afraid I would not be in a position to exactly say EBITDA per ton, but I can just give some guidance on the margin. And as I said, if you see, the volume is going to be good next quarter, and there will be improvement. But prices, we need to wait and watch, and we are a little bit cautious, and the prices, especially on the paper, it's expected to come down, and that has a significant impact. So it will be difficult to say whether margin is can be retained, or it may not go up, but definitely we will put all our efforts to retain the current margin levels.
Okay, Mr. Veerappan, this time the company has also announced 650 crores of investment in your new pulp plant. So how will the funding, how you guys are looking to fund this particular plan, and by when the synergies are expected to kick in?
Yeah, I think you know the cash situation of the company. We are in a good cash position, and but as far as this 650 crores is concerned, we expect to fund around 400 crores through internal accruals, and we may leverage around 250 crores through debt, and that's the plan as of now. And this spend will be in the next 2 years, and the project is expected to commence sometime stabilize in the Q2 of next year, 25-26. And from that point of time, maybe another 6 to 9 months to completely get into 100% or ramp up the utilization. The synergies will start coming from end of 25-26 and fully from 26-27.
Right, Mr. Veerappan. So if you could actually touch upon what's the overall strategic business outlook for your company for FY24? Also, given the fact that now can we actually, with the commentary that you're giving, saying that at least Q2 for now looks a bit difficult or rather subdued, given the fact that you are seeing some sort of pricing pressure, as well as you can't even ascertain if you are able to maintain margin?
Yeah, in terms, let me just tell you, I think you knew that last year was completely an exceptional year, outlay year. So there's no comparison with last year. But however, these levels, we do expect Q2, we can really comment only after seeing the Q2 results. And Q3, Q4 is, at least the hope is there to improve further. At this point of time, the same levels will continue, but definitely there's no comparison with the last year. But on an absolute terms, the company will continue to do well and be generating cash. Yeah.
Mr. Virappan, you sound quite bullish on to the volumes as well as the demand outlook. But when we say a packaging board business, that had witnessed a drop in the volumes this time. So going ahead, do you expect any jump in this particular segment as well?
I think I mentioned that there is an additional capacity in China and the exports have dropped significantly. So this is putting a lot of pressure on the domestic, both in terms of volume and the pricing, mostly in the pricing. But yeah, the slowdown is mainly due to the pharma segment has not picked up, but these are expected to come up in Q2 and Q3. This situation will not remain. So the hope is there that the volume will improve further.
Hi, Mr. Virappan, we'll leave it there. And thank you so much for joining us on ET Now to give us actually an outlook of the quarter gone by as well as what you're envisaging for JK Paper going ahead. And thank you so much for joining us this morning on ET Now. And that was the management of JK Paper talking about the quarter gone by, what they're expecting going ahead. No doubt you have the international pulp prices that have come down, and that definitely is putting a constant pressure on the domestic pricing is what the management has noted. But the fact that the stock is reacting to a good set of numbers, 6% uptick right now coming in for JK Paper as we speak. But let's move on and let's continue continue taking all of your queries. We did take a detour on that particular front. If you look at the markets, continues to be subdued in trade today. And the next query that I have is coming from Mahalakshmi. She's writing to us from Hyderabad. Rajesh, this one is for you. She has 60 shares of Grindwell Norton at a price of 1920. She's in 11% profit, wants to add some more for the longer term. Do you think it's a good decision given the fact that she's a long-term investor to go ahead and add some more of Grindwell Norton in her portfolio?
See, no doubt it's a very good company. Fundamentals are very strong. The company has been doing well. The only problem with this stock is low volume. But since she is a long-term investor, I don't find any reason to believe that volumes would be a concern. So one can add this stock for a longer-term horizon.
Okay, Kunal, the next question is from Anindya, and he has bought Havells. He recently bought this particular name, 300 shares from a price of 1,366 rupees. And post the earnings, we are seeing the counter under pressure. So going ahead, any hopes on recovery?
Not on an immediate basis. I think Havells, Voltas, most of the other peers, I think have done very similar in terms of the price trends over the last 3-4 days. Havells corrected from 1,400 to now sub the 1,300 mark, 1995. Is where the stock is trading. So I would expect that the underperformance would continue. But at the same time, I think it's a stock which is just trying to get into a consolidation. So it's not as if the chart patterns for Havells are extremely bad or negative, but it's just that the stock may take some bit of more time to consolidate here, sub the 1300 levels. So if you are a medium-term investor and if it's not assuming an FNO kind of a position, then I think you should continue to stay put for Havells. Unless if it's very, very short-term oriented targets which you're looking out for, then I think it makes sense to exit. But if you can hold on to it from, say, the next 1 to 3 months kind of a perspective, then there is all the more chance that post this consolidation, whenever that gets over for Havells, the breakout should be on the upside for the stock.
All right, this next one is coming to you, or for you rather, Rajesh, and this one is on a stock that just actually reported its earnings a short while ago, and that is Jyoti Labs. You have Sagar that wants your view. He's saying that it's been a slowest FMCG counter till date. He's holding 1,500 shares at a price of 150 to 152 rupees per share. He's saying that is it a good stock to hold on to the medium term or the long term, and any sort of earnings or growth projections? We just had the numbers, the stock reacting to those numbers, 13% upside that this one is witnessing right now. But longer term, how is this counter?
See, it's a very good company. Ujala is the market leader in Indigo, and I think that is going to take the company forward. The numbers have been pretty good. Bottom line has jumped by almost 100%. I think with the kind of brand they have, not only Ujala, the other brands also, this company can give very good returns in a longer term horizon, maybe 2, 3 years down the line. CAGR return of around 18-20% is quite possible. One can definitely hold on. Adding at this point of time, I think today it's only a move because of result. Let that settle down. 250 odd levels to 40 odd levels would be a good level to enter. For a longer term horizon, yes, it's a hold.
Okay, moving on, and Kunal, coming to you for view on two banking names. Kamal from Delhi has bought AUKUS futures of Bank of Baroda from a price of 101 rupees, and he also bought ICICI Bank futures from a price of 993 rupees. At this point in time, are these counters hold or sell at this point?
You'll have to repeat Bank of Baroda at 101 for August futures.
Yeah, he
The
mentioned
stock is at 200.
Yes, the stock. I guess that should be 201.
Okay, so I think if it's 201, then I think you should look to pare down your losses or at least keep a stop loss on your trade. I think 195 could be a stop loss for Bank of Baroda. It looks to be a struggling stock on the charts, frankly, because I was doing this comparison over the last 8-10 days that where most of the PSU banking names, the tier 2 names or the ones which are mostly not in the FNO series, these stocks have actually run up by 15%, 10 to 15% on an average. Bank of Baroda in the last 2-3 weeks has actually underperformed. From 210, the stock has gone down towards 197, which means that the stock has inherently seen a selling for itself. I would suggest to keep a stop loss on the trade closer to 195.
Okay, this next query that I have is coming again for you, Kunal, because he's asking for a target and a time to exit. ICICI Bank purchased 2 months ago at 940. Infosys bought at 1,330 2 months ago. This one is from Sushil Kumar from Trichy.
So ICICI Bank, maybe 1,040 could be a target for the stock price. So if you've bought at 940 levels, I think you have built in a good buffer. The stock, I remember, I think clearly post results last quarter as well, the stock had went into a time-wise correction. So it spent almost 1 month or 1.5 odd month at the range of 920 or 940 approximately in the previous quarter results. And post that we saw a breakout and the stock hitting back 1,000 levels. So if you expect similar kind of a price up move for ICICI Bank, so in the next 1 or 2 months, we can expect 1,040 to 1,060 as a potential target range.
Okay, Rajesh, coming to you for the next query. This one is from Anjali from Chandigarh. She is a senior citizen and holding 17 shares of Tata Investment from a price of 2,400 rupees, and also has Bajaj Finserv 35 shares from a price of 1,454 rupees. In both of these names, should she book profits specifically in Bajaj Finserv, and for Tata Investment, can she add more at current market price?
Both are a buy from my side. So obviously it's a hold for her. Bajaj Finserv, it's a holding company of Bajaj Finance, holds both their insurance ventures. They have moved into EMC, and IAMs have been good. Asset quality has been very good. I think Bajaj Finserv is a buy from our side at this point of time. Maybe a target of 2,000 plus levels in the next 1 year. It's quite possible. And the second one, Tata Investment, it's trading at a huge discount to its intrinsic value. So it's also a buy from our side, considering the fact that it holds a whole lot of investments which are at a much higher valuations than what it's being quoted at. So both are a buy from our side.
Okay, this next one that I have is coming in from a viewer, Sandeep Kumar, writing to us from Tirupur from Tamil Nadu. He's a very big fan of yours, Rajesh is what he's mentioning, and he waits for you daily on the show. Yeah, why don't you come daily on the show, Rajesh? We will talk about this very soon, but yes, one stock from capital goods and auto sector for the long term is what he wants.
Thank you, sir, for your kind words. Capital goods, the first name that comes to my mind is Cummins India, although it has run up quite a lot in the recent past. But still, considering the kind of capex going on, I think it can give better returns still from these levels. And the other one, which sector he said? Auto, right?
Yes, it's auto, cap goods and auto.
Auto in four-wheeler space, the first choice would be Maruti, despite the fact that it's almost touching it 10,000 odd levels, but still with the kind of new launches, almost 50% market share in passenger vehicles. This would be the first choice in four-wheelers. And in two-wheelers, Bajaj Auto, considering the fact that not only domestic, but international markets are also doing well, although in some territories, the exports have gone down, but still the new launches are going to do well. They'll try, I think, is going to add good numbers to it and even good margins, because the higher price bikes have good margins into that. So any correction in both these counters should be taken as an opportunity to add.
Okay, so that's the outlook on the two-wheeler names. But with this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let me continue taking your queries, and this one is coming from Mr. Ganesh Sitaram, and who's written to us. And Kunal, he wants to know about Tata Steel. He's saying that the stock has not seen any correction, actually irrespective of what has happened in the earnings perspective. But he wants to know, will it come down anytime soon? I'm not sure if he's already holding on to the counter or if he's looking to invest in this particular counter. So what's your view on it on the charts?
See, my belief is that Tata Steel has actually been a huge underperformer. So I'm not sure what time frame you are looking out for. But then the time frame which I am spotting for Tata Steel from 2021 highs when the stock was almost at 145, 150 price adjusted basis towards right now where the stock is at 118, 19 mark. The stock had been a huge underperformer with respect to the metal peers as well as the other large cap names. It's just that in the last 1 or 2 weeks or 1 or 2 months, the stock has gotten a lot more momentum. The chart patterns are a lot more positive as well as consistent for Tata Steel. So I would expect that this momentum and this trend should continue for Tata Steel. But remember that it's a high beta stock. So you ideally have to be invested into the stock price with a caveat that you drop your position size because of the high beta nature, as well as you look out for more medium term time frame. So if that's the case, then I think you can look to start buying Tata Steel even at current levels.
Moving on, and Rajesh, the next viewer named Radhakrishnan wants an outlook on the exchange houses shares, and he's already holding MCX from a price of 1,550 rupees and going ahead, though he's sitting at some profits right now. Should he expect more profits out of this? And he also wants your take on BSE after the recent buyback announcement at a price of 816 rupees at current market price. Does this look attractive to accumulate?
See, out of the two, I would suggest going for BSE. With 7,000-8,000 crore market cap, the company is holding 3,000 odd crores in CDSL, 3,000 odd crores as cash and bank balance. Apart from which, it has a first mover advantage into GIFT City, INX. It is the largest in SME platform, the largest in mutual fund, Star Mutual Fund platform, debt-free company. I think all parameters are sound for this company, and the buyback is there. So I think one should go long on BSE for a longer term horizon, maybe 12 to 18 months down the line, it can give good returns. As far as MCX is concerned, it goes into deep correction after every rise around 1700. I think it would be a tough level to cross. One can buy it around 1600, 1550 odd levels, but at this point of time, when it comes near to 1690, 1700 odd levels, it would be a book profit kind of thing.
All right, and with that, let's actually kickstart with the rapid fire then. And this is the first one coming in from Arvind. He wants to buy 2 stocks right now for a holding period of 1 year. Kunal, your 2 stocks.
So IDC First Bank would be the first stock which you can consider at current levels, and the second one from the large cap auto stocks, that's Tata Motors.
Okay, Rajesh Mehti wants your take on BPL. He has purchased 250 shares from a price of 65 rupees. So any take on this one?
It's a hold from a side, 80 rupees target.
Okay, NAM India, the viewer Narveen Jadhav has bought it of 1,000 shares at a price of 302 rupees per share. Kunal, can you look to book profits in this one?
Short term wise, yes, you can look to book profits.
Okay, Rajesh, what's your outlook on Tourism Finance Corporation if you track this one? Anjali has bought shares around 85 rupees. So any target price going ahead?
It's a book profit. I would say switch to some other better names.
Okay, Kunal, Sunny has bought 400 shares of Shah Metallics at the price of 290 rupees per share. What sort of target are you keeping for this one?
I would probably keep a target of at least another 5% on the upside to from a short-term play.
Okay, Kunal Balan wants to know your take on Ashok Leyland as well as Craftsman Automation. He's sitting at a 15% plus profit in both of these. So is that a hold or book profits or make a switch?
Look to book profits on both of these stocks.
Okay, Akhil from Delhi is a long-term investor and he wants a railway stock for the long term at current market price, or should he wait for dips? And Rajesh is saying he already has IRCTC in his portfolio.
Go for Texrail. It's giving good returns. I've recommended from 70, but still it's the buy.
Okay, Rajesh, metals making a comeback, and Dasare Radhi wants to know that is this a good time to enter JSW Steel at current market price and any target for the next 1 year?
It's a good stock, no doubt. One can have a target of 850, 860 odd levels in the next 1 year. JSPL would be a better bet.
Okay, Ramesh from Delhi wants to know, is it the right time to buy UPL given the fact that this particular counter has seen some sort of a dip of late? What's your take, Kunal?
No, not really. I would not suggest a buy.
Okay, Kunal, Dhananjay wants to invest in 3 counters, ABFRL, SRF as well as Chambal Fertilizers for the next 2 to 3 months. So amongst the 3, any name that you like?
ABFRL could be the best bet.
All right, and with that, we come to the end of this edition of Buy Now, Sell Now, as well as the queries. Thank you so much, Rajesh, as well as Kunal, for joining us on the show, giving us a take on various sectors, as well as resolving viewer queries. And viewers, we are totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. Stay tuned. Markets at noon coming up next.